Okay, so I think this is fine now, right? Srinasan, is the recording on now?
Yeah, it's live now.
Right, yeah, okay. Okay. So with this, I'm sorry for all these technical things. Okay, little bit I'm not that good at the technical aspects of the presentation, but I hope to do justice to the topic when I'm speaking about it. And thank you everyone for participating. Let's begin from here. So I think this is fine now, right? Srinasan, is the recording on now? Okay.
Yeah,
Yeah, it's live now. Repeated. So with this, I'm sorry for all these technical things. Okay, little bit I'm not that good at the. Okay, I don't think so. Now we will have that issue. So this gets going. Hmm. So I would rather call budgeting as an entrepreneur's preferred tool for growth. One tool which can anchor an entrepreneur it, to sail through his vision. I know I have to reach from this destination. I have a vision 5 years from now where I want to be, or 10 years from now where I want to be. To give that vision, that material substance, that yes, you can do it. Budget is the right tool. So let's understand how it is a right tool. If you all say with this webinar, since we are not able to look into each other's face or I would not know whether you understood what I'm trying to tell you or not. So if it would be better, I will involve some kind of participation through chat, and I request all of you to be participative in this session. Hmm? Yeah. So now the agenda for today's session, I'll just explain the agenda. Introduction, what budgeting is all, why we are doing this session on budgeting. Okay, what are the benefits of budgeting? When you look at the introduction, it's as simple as that. We are just ahead of our financial year. What do we want to do in the next financial year? What is our vision? What is our goal? How much, if we do it in the next financial year, in a numeric term, we can reach our goal over a period of time. It not necessarily it should be only profit, but profit is one easy measurable anchor, I would say. Most easily quantitative, quantifiable anchor for our growth journey is the profits that we make. So let's see how we can define that and achieve a desired profit. Second, what are the benefits of doing it through budgeting? Okay, there are methods to which achieving profit, but budgeting is one very strong tool. Not only government of India, but organization across the world follow this tool to make sure they are moving ahead in the right direction. See, when we have elders in the family, what they do, they will guide us. Okay, they will say, do this, don't do that, don't do this. As entrepreneurs, what happens? Not necessarily we have the family lineage for somebody to guide us, but we almost we will have an anchor that is like a budget that can guide us whether we are going in the right direction or not. So budget acts as a tool for our growth. What are the things that are required for budgeting? What are the types of budgeting? Basically, not one, it is not one size fits all, everybody, every organization. There are different types of budgeting that we need to evolve and move forward for our organization. It could be at this stage it is one kind of budgeting like zero based budgeting or something like that. The next year it could be an incremental budgeting. Post that it could be some other budgeting. But it's absolutely fine. We should understand what the types and kinds of budgeting and how we can implement it in our organization. That's what I said, suitability of budgeting. What kind of organization, what kind of budgeting can be done? What is a budgetary cycle? Basically, there is a cyclical flow to the entire budgetary exercise, because it's not only applying or preparing the budgets, but it ends with monitoring and taking action. So, right from the preparation of the budget to monitoring and taking action is an essential and integral part of our budgetary cycle. Then next is automation. Need for automating. Why we need to automate and how we can automate budgeting. See, since we are in an automation era, it's more important that everything needs to be automated. Once it is automated, your burden of errors or your challenge of doing the same job again and again reduces to a large extent. And same goes with budgeting. And we will also see one case study. where we can actually apply this budgeting exercise we have applied for our client, and we have seen the results. Are you all with me? How many of you want to increase your profits? How many of you want to have that financial discipline and make sure that you are in the right track to growth? So one of them, yeah, I am expecting more replies in the chat. Thanks, Hariharan sir. Thank you, Sam sir. So we all want to increase our profits. We all have a desire to reach our goal. Our goal could be long term, or goal could be short term. Currently, we're looking at 1 year trajectory, how we can take things forwards. A budget is something that will tell your money where it has to go instead of wondering where it went. See, when you look at last year accounts, which is, oh, we spent so much on this thing, this did not give result, oh, this has happened. It is only a post-mortem that we do. Most of the time, the exercise is a post-mortem exercise. But what we want to do here is not only post-mortem, but we want to be current, concurrent, live, take course correction, move forward. So, in that way, the common challenges as an entrepreneur, what we face is one, we have our existing operations to manage. So, where is the time for budgeting? We have, see, we end up doing some day to day chores instead of focusing on the plan that we need to create. Budgeting is as simple as this thing. If we fail to plan, we plan to fail. It's, it's most apt when it comes to budgeting. The next one is we do not have control over cost. We take decisions randomly. So today this opportunity has come. Oh, we assume, yeah, this is possible. Maybe because of this, we will get more sales. Maybe because of this we will have more employee satisfaction. Maybe because of this activity. So it's more of a random decision making, and hence we are not able to have control over our cost. It's as simple as that, how we need to control cost or make an optimum cost utilization of the resources, that we need to understand. Unsystematic growth predictions. We have introduced new product or new services, something in this line, we expect some kind of growth here. And then we have our existing business. If we shift our focus between businesses, the result is going to be in certain manner. But if we can be systematic, if we can look at this existing business, these are the parameters and we should be able to work on these parameters, then there is a possibility that we should be able to take things forward from here on. Just a second, huh? Just a second. Yeah. Okay. Next is this one. What do you say? Decision making. Because there is so much of randomness in our decision making, our decisions are not effective, and sometimes we are disaligned to the organizational goals or objectives. It's all, there is hundreds of opportunity in the market, but we need to understand which opportunity we can capitalize on at this point in time. It's more difficult for an organization to save without estimating what is our future income. So we do not know what is going to be my targeted profit. If we do not know that and how I'm going to achieve the targeted profit, I will not be able to save as much as I should. There's a comment in the chat box. I just want to know. Yeah. It is not a business assumption. These are the challenges that we actually face from various entrepreneurs. When we look at consulting, we see that, suddenly the focus of the entrepreneur is into the new project completely without having a proper handing over or hand holding of a existing project. Sometimes the decisions are not effective because they're taken randomly and with the bias. So then the next part, now to bring a solution to all these challenges. We understand that these are the challenges, but now how do we bring a solution to all these challenges? The best way to bring solution to these challenges is one, prepare a budget. Budget is simple financial statements stating that this is going to be the income, this is going to be the expenditure, this is what I plan to forecast. This is how an standard for or a target for income and expenditure is set. I'm just giving you income and expenditure. Whatever be the kind of income, whatever be the kind of expenditure. You can call it as an inflow and outflow as well. But this is one guiding force for the next year, how this can be done. Why is it required? One, first thing is it helps in effective target setting. You know what kind of targets you're going to set. Is it going to be reasonable? Is it going to be practical? It's going to be achievable or not? That's very important aspect of budgeting. What kind of forecast or target you're setting. Second is control mechanism. So what happens is when you take random decision, there's nobody to control you, nobody to above you to say no. But when you have a budget, it more so controls you than your employees. First, it is an aspect whether you are making a judicious decision or not, whether it is planned or not. If it is not planned, yes, it's possible that you can make that expense, but you will think twice at least before making that expense. Will be more result oriented, more focused towards it. Third is feedback and real time control. Any budget provides you, once you do a variance analysis, let's say a monthly basis, or if it is a real time budget that you have automated in your software, you can see on a real time basis whether you have exceeded the budget or you are in par with the budget. How is your performance as far as your sales and inflows are concerned? So it, because you are able to look into it on a real time basis, or let us say on a monthly basis, you will be able to take the actions required either to rectify your decisions or to move forward with confidence that this decision has been right. So let me spend a little more here and I can take the next best decision. So, considering all that, I'm still telling you, everybody would be knowing what is the benefit of budgeting. But just to reiterate, it is such an important thing. It's actually like if you look at it, an annual exam. Okay, it's not about filing returns or what kind of books you prepare, but budget is a real-time management exercise where it guides the management for planning and formulating policies. Your lessons learned this year, you can apply it in the next year. As simple as that. This budget, I thought I will be able to make it or my organization will be able to achieve it, but it's not been able to achieve it. Are you all with me? Are you all able to follow me? Just if you can say yes in the chat, it will be helpful. Yeah. Okay, super. Thank you all so much. So we are able to follow. Good. With this, what happens is, now as management we have a plan, we can plan and we can formulate policies. Objective of the organization is very specific and very clear. It's not we are going to do more of wholesale business, more of retail business. It could be a mix of this, and this is the mix that we are going to follow. The absolute clarity in the objective of the organization. Continuously, you will be able to monitor. Okay, with the budget variance analysis, you are going to continuously monitor how your decisions are taking shape, and improve on your decision making, both capital and revenue resources, how you are able to utilize the resources within your organization. That efficiency is shown up through budgeting exercise. You have x number of people with you. Are they enough, capable enough, efficient enough, or they are just numbers added in the organization? Are you doing justice? Are they doing the justice to the task that has been provided? Is it yielding results? If it is yielding results, what kind of results it is yielding, and are you satisfied with that results? So a budget is like threadbare analysis of each and every aspect, each and every expense, each and every product that you are going to deal in your organization. In fact, tangibly if you look into, I have EBITDA or a margin of 50 percentage in my business. If you have so much margin, where is your money locked up? What are you doing with your money? Is it with the vendors? Is it lying in the stock? Or have you invested for the growth? If you have invested for the growth, what kind of returns are you going to expect? So a budget can give you a complete overview of where your organization and how it is moving, in what direction it is moving. The intangible benefits of a budgeting exercise is as simple as this thing. And the intangible is the focus moves from day to day operations because you have set the budgets. The focus of an entrepreneur moves towards expansion and growth. It's very important that the entrepreneur focuses on expansion and growth. All the common objectives, be it HR, admin, whatever is that objective, everybody is aligned towards that objective. So this is all intangible benefits of a budgeting exercise. Third is data management. Because you are doing budgeting now, everybody wants to put their performance in numbers now. Earlier, people were not interested. We are doing work now. You know, now we are working only now. Mornings 10 to 7, we are in front of you. What you are saying me? But with budgeting, what will happen is all your data gets organized, they become more responsible and accountable. There is a competitiveness between the employees also, motivation, sense of ownership. See, all these are outcomes of the budget which are intangible in the nature. So far, what we have seen is a budget. Budgeting is important. Mainly, one, it helps you focus and target your profits or your sales, or you're looking at complete cash flow management. Second, it helps you to keep control over your cost, what you budgeted and what you are incurring, whether you are on the right track or not. Third, you can get a concurrent feedback on your actions. So let us say you have invested so much and this has been your area of focus. How focused you are and how concurrent is your plan of action. Whether you are on the right track or not, budget gives you. These are the tangible ones. Intangible, an organization itself gets aligned and works towards achieving these goals. Now, what are the prerequisites of budgeting? The prerequisites of budgeting are one, we need a database. What kind of database? Historical data which makes sense to the entrepreneur, how and what he can do with that data, what kind of improvement in product, improvement in margins can he achieve. Second, what is the kind of committee or participative budgeting? It is not that we can impose. In earlier there was almost like a dictatorship where they will say you got to get this done, it used to get done. But now if you have a participative management where people contribute to the preparation of budget, the result is you will be able to achieve much more. Clearly defining business policies. There are policies. We will do this job. We will take up this kind of engagements. We will do this product. We will provide this services. Apart from that, these kind of vendors we are going to deal in. This is how we are going to deliver, and we are going to move forward. So, with these are the prerequisites of budgeting. Apart from the prerequisites, now you understand. We understood why budgeting. What are the benefits of budgeting? What are the prerequisites? What is it? Essentially, there are some things that are required to build that base. We need to have that base ready. Now that the base is ready, what are the kinds of budgeting or types of budgeting that we can have or look forward for? First, the type of budgeting that we're looking forward for are the various types of budgeting, various kinds of budgeting. If you Google out, lots and lots and lots of more are there. But primarily, if you look at incremental, okay. Hmm. Incremental budgeting, which means what has been your last year, how are you going to continue the business in the same pattern, and we move forward. Activity based budgeting, zero based budgeting, profitability budgeting, and cash flow budgeting. See, I have taken very specific according to the needs and the demands. We will see how each of them can be implemented in an organization. Incremental budgeting, simple. Last year's budget, I understand this is how the business is going to be, and this is next year I'm expecting some kind of growth, and hence if I have to grow my business, I need to incur some kind of incremental expenses, and that's how the budget will be prepared. It is a very simple. In fact, what you can do is, if you have that base, let us say last year's numbers, last year's figures, leave the COVID year. Okay, COVID year is one exceptional year for everybody, where a lot of disruption that has happened. We will come to that topic later. But then, considering that an incremental budgeting can be prepared, it is the most simple way to start. It is a very simple way to begin. But even in incremental budgeting, what I would say, go to the granular level. We will see how, what do I mean by granular level, and how you can get into that aspect of your organization. Next types of budgeting, next type is activity based budgeting. Simple. What is the activity that needs to be carried out to deliver that kind of product or service to the customer? So what you do is, let us say it's a very top down approach. I want to deliver X products. I have a organizations have a very mix of services that they can offer. So when they bundle up services, so this is the activity that they need to carry on, this is the activity that they need to carry on. Based on this activity, this is the budgeting that they will do for the organization. The second part can be in, let us say you have an industrial or a manufacturing unit, fabric manufacturing unit. You from the yarn to processing, from processing dyeing again, if you have the ready fabric, you will do finished product, which means you will have ready made wear. Anything can be in your process. Let's say somebody is just giving you the order for dyeing alone, so it is only one activity that is going to be carried out for that order. But somebody says processing and dyeing, then you have two activities. So based on what are the activities that you need to do for that order, accordingly you will understand the type of work involved, quantity and the cost of work involved, and you will budget or price your orders accordingly. When we call by activity based budgeting, if an organization carries out 7 8 different activities, what kind of budgeting it should do to make sure that overall, after meeting all its overheads, what kind of profitability it can have. It's more, I told you, even the incremental budget can be done at granular level. This is more versatile, more volatile, and how we can, as well as how we can make it in the organization. More from a manufacturing point of view, more from a service or a project, where people have different projects where deliveries are different, then they look at activity based budgeting. Next is demonstrate how activity based budgeting can be implemented. Okay, yeah, it's a small example. I'll just take a, in a activity based budgeting, let us say the cost of manufacturing the product last year was 4 rupees per unit, but current year your cost structure has changed. So you will understand what activity, what is the cost structure, and how you can make it as it has become 5 rupee per unit. In just a minute. Huh? So just in case you are thinking that you can put last year what cost was it, and now this year how much it's going to increase by 10%, it is not going to work out. In such scenarios, it is better that, just a second, just give me a moment. Thank you. Yeah. Next comes zero based budgeting. Ideally, this is the kind of budgeting that startups do, or projects which are in infrastructure, or you can say something that is starting from the scratch, or you're getting into a new vertical that is from the start. What it is all about is each expense is justified. Why you are incurring these expenses? What is the need for expenses? Which means the base is zero. COVID has actually taught us that make the base zero and rethink on your expenses. Okay. So, what is the kind of expense that you're incurring? What is the need for expenses? Whether there is any need or there is no need at all, and how we can look at it from here onwards. There's an example of zero based budgeting where blindly and incremental budgeting will not be of help, or a senior management who will allocate on a random basis, that also will not be on help, but something which is more so why this expense is incurred and how this expense is incurred, will that is what will be of help to us. After this, what we have is profitability budgeting. It's a very simple budgeting. The purpose of this budget is to forecast the profit and to make sure what is the kind of sales you need to do for achieving this profit. Cash flow budgeting is more wholesome. In this, what happens is, in this what happens is, you understand I have done sale, I have got profit. Where is this profit locked up? Whether it is invested in stock, working capital, or I have invested it for growth, or is it lying in the FDs? Whatever it could be, but this is what cash flow budgeting is all about. Next, just to dwell deeper into profitability budgeting, it is a very simple example that I have considered: sales, operating expenses, profit, EBITDA, depreciation, F. So, as per all the information that you have gathered from your organization, you expect there is an expectation of 30,000 rupees profit. These are just random numbers here, but still. But let us say you want a profit of around 40,000 rupees. Then what you should do? What kind of sales should be achieved? What kind of expenses reduction needs to be done? We need to reverse work on it and make sure we have a budget that is aligned towards our desired profits. That's why I say budgeting is a tool to help us understand the desired profit. The next part is cash flow budgeting. Okay, let's assume that with cash flow, with the profitability budgeting, you understood it's how to make profit. No, it's not enough that you make profit. Okay, I can make a sale of 3 lakh rupee a month, but I should realize that sale also. Otherwise, it's lying in the debtors. So in this case, there is a simple example where we say yes, where we say that company expects 1,000 pairs of shoes and as a stock, or it expects a sale of 3 lakh rupees in the month of July with 5,000 pairs. What is the kind of cash flow it is going to get? So with that sales, 70% of the sales are in cash, which means they will get 2,10,000 rupees. They will also realize 75,000 rupees from debtors. They have these commitments to make. Closing balance, they are having a negative 20,000. Now, what they should do, they should think of short-term arrangement of funds, or they should think of better realization. So, a cash flow budget actually is a wholesome budget which helps you understand, realize that it's not only sales that is important, but it is also profit and materialization of that profit. That is very important. Lot of organization, lots of organization, they know that they have to do the sale, they know all this is possible, okay, but when it comes to realization, that is a place that they get stuck up really bad. Either their payment patterns are very poor, or their realizations are very poor. They are not able to handle the suppliers because they're paying late and no discounts are availed. Hence, the cost of the product becomes much higher. So they get into a vicious cycle because of not handling their cash flows properly. One of the example is where we worked on a client was on a monthly basis. We worked on a cash flow variance report. What are the see in, these are just random numbers here. They are not client numbers, but then what are the area of expense and income? They had collection from debtors. They didn't have any cash sales. They had some direct expenses, some advance payments, foreign travel, then bank commitments. They had capital investments. They are doing a project where they were supposed to invest in that machinery plant. It could be as simple as buying a printer. Okay, I'm just giving you a random example. If it is the organization is a startup, then you need to plan where your uh, printer purchase, things like spending on an event or something like that. So where then we understood this much only is available for payment of suppliers, but how much we need to make a payment, this was the projected payment. Only if we make these kind of payments our supplies will be regular. So considering all that, then we moved on. What is the need? How much is the need of cash? And we understood we projected 75,000, but we borrowed only 50,000 during that month. We again projected so much, but we borrowed a little lesser. We are able to maintain a cash balance. If you look at realization has been low, but because we are able to manage our expenses or outflow on account of expenses, we were able to manage the cash flow. So this is only one scenario, but like this, multiple scenarios will come every month. There will be some kind of firefighting, or daily understanding whom should we pay first, whom what kind of payment has to be done. This is one challenge every organization has, be it manufacturing, be it sales, be it even educational institutions, anything. Okay, whom to pay first. So let's get this. You have cash collection, you have realization from debtors. Which expense should be paid first? One, the operating expenses that will ensure that the operations of the organizations are smooth. you do not have a challenge. If you don't pay rent, you have to vacate the place, then you have a challenge. If you don't pay your monthly expenses, employee salary or something, you have a challenge. Who will work on with you? So those kind of operational expenses need. Second is a financial commitment. If you have borrowed money, if you pay them on time, then they will help you honor that. Third one is, now let us understand assets, vendors, and investments. Whom you should honor first, whether it is some assets that you're buying, vendors, or investment. Yes, prioritize the vendor, because once you make payment to the vendor, then the vendor will give you continuous supply. Then you can operate your business well. Assets and investments can be deferred for some time, not for all the time, but you need to make sure that your cash flow is rolling. So prioritizing your cash flow is very important. We should have a very appropriate payment and collection policy. It's not only if you have a good collection policy you are there in the right place. If you have a collection policy, make sure your payment policy is also appropriate, so that you can manage your business expenses well. So there are two fundamental differences between cash flow budgeting and profitability budgeting. Profitability budgeting helps you understand what should be your desired profit and what kind of sale and purchase you should do to make sure, or gross margins you should achieve to enable you to meet those expenses and come to that profit. But cash flow budgeting is more wider, more important in any organization, as cash is the lifeblood of an organization. All cash receipts and all expenditure, including tax, needs to be factored in a cash flow budgeting. And for organizations which are in the growth stage, let us say either they're from startup or they're from one vertical to another vertical, one showroom to another showroom, all these things need complete hand holding on account of cash flow budgeting. If you have entered into a new project, do not mess up the existing project because of your new projects. Lot of people, what happens is, they assume that their existing business will give so much of profit automatically, and they get into a new venture. But when they get into a new venture, they stop focusing on their existing venture, which does not yield that profit. Now neither their new venture is picked up, nor their old venture is taken, old venture is also taken a back seat. So you need to do a proper cash flow budgeting along with capital budgeting, to make sure that you are able to sail through your growth journey smoothly. Both capital and revenue items need to be taken care. Which business, what kind of budgeting? I think that is one thing. Oh, so many budgeting, I didn't know. I thought it is a very simple thing. Government of India gives a budgeting where everything is in deficit. Both capital deficit is there, revenue deficit is there, but they're still managing the show. Okay, one thing you should understand, India is also in a growth journey. Okay, so all the time there will be some deficit, there will be a need for infusion of funds, their infrastructure needs to be developed. These are all capital projects that government is taking. So similarly, if you look at incremental budgeting, can be done for hotels, tourism, FMCG products which are already established in the business. So last year you made a sale of 100 packets of Horlicks. This year you should look at 110 or something like that. This is an incremental budgeting. Activity-based budgeting is for manufacturing industry, utilities, auto sector, service sector. Things are done project-wise, activity of a project. Then cash flow budgeting, infrastructure project, educational institution, especially because the cash flow in the educational institutions is not streamlined for every month. You collect fees only once in 3 months or once in 4 months, but you have to meet out your expenses for the whole year. So it is always better to go for cash flow budgeting for an educational institution. And during the lockdown or during the economic recession, it's always better to go for cash flow budgeting. Zero based budgeting, anybody can do. I'll tell you, it's a very simple thing. You have to just question why you should incur these expenses. Can I meet the entire operations without incurring these expenses? So especially government projects, online retailers, startups, business in stress, all these have to do a zero based budgeting, because they will fundamentally question why you need to incur these kind of expenses. Then you have profitability budgeting. Textile industry, professional services, general trading, all these people will have to take care of profitable. See, it can be mix of both. The stage of the business and the kind of business that you are in. Okay, that will also define what kind of budgeting that you need to do. But sometimes it is almost combination of one or two items together, but sometimes it is almost purely incremental or cash flow in nature. We have understood about budgeting. Almost everybody knows. Okay, how many of you know that budgeting is helpful for your organization or will be helpful? So far, with whatever you listen now, I think I should have convinced you that budgeting is a very important aspect in your organization. How many of you feel yes, budgeting is important and we should do it for our organization? Srinivas, am I audible? Yeah. How many of you think that budgeting is important and we should do it for our organization? You yourself can do it. Yeah. Yes, Sunram sir. Hariharan sir also feels that budgeting is important. So I would rather say yes, it's very important and we should do. But where do budgeting fail? See, when we understand that it is important, it can help us design, uh, give us the profit, desired profit. Then where do you think budgeting as such fails? Which is the area? There are I don't in the entire budgetary cycle, any place if the budgetary process fails, then the budget fails. First, budget objectives are not clearly defined. We want to do this and that's why we are budgeting. We want to achieve this kind of desired profit, that's why we are budgeting. If we are very clear with the objective, then the budgeting exercise will not fail. Second part is if we are not able to collect the sufficient data, I will show how the budgeting has to be done so that you're all well equipped and you can take the decisions on your own. But understand that unless you collect sufficient data, you will have inaccurate data with which you will do budgeting, and that's why budgeting will fail. Third is enough time to review the budget set. Most of the organization, what happens, this budgeting exercise is also delegated. So the purchase department will do their budgeting, finally finance department will collect the budget and keep it with them. But somebody has to review what the budget is set. Does that make sense? Is there some alternative plan of action and how we need to take it forward? If it is not reviewed, budgets will surely fail. Oh, that I didn't see. No, maybe that is the reason. So leave it. This time you leave it. A lot of people say that also, but we should understand that that. Second is unaccountability of the data collected and updated. Somebody who's given the data no, should be accountable to the data. Yes, I have 15 people working. These 15 people are important and that's how we are going to they are going to contribute in the organization. A HR has to take responsibility of number of people. A department head has to take responsibility of what are the tasks involved for these people. So like this, if you take accountability of the data that has been shared, I need a budget of 3 lakh rupees, 20 lakh rupees, 2 crore rupees for marketing, whatever be the number. But somebody marketing head is taking responsibility of that number. If the somebody is not taking responsibility, no, it's as good as not having that number at all. So that's why budget has to be a participative exercise. Second, not monitoring the outcomes or analyzing the variances. See, I have put the budget. I know if I do all this, but am I monitoring it? As simple as there is syllabus in the school, but if they don't conduct the test and assess whether the child has understood it or not, they don't know whether they are heading towards it or not. Annual review is important, but interim tests are also equally important. So similar to that, a budget variance analysis will help you analyze where you're standing and what course correction needs to be done. So these are the once course correction. What if you understand and do not take corrective actions? Okay, that's like putting the entire effort of the budget team, the finance team, the other teams who are holding themselves accountable for this, all their efforts into bin. So implementation of corrective action. Once you know that this has happened, this is a result and effect of the thing, then you have to take corrective actions for that. So budgets primarily fail one if they have not been prepared well. To prepare well, you need to know the objectives. You need to understand whether you've collected the right data, whether that has been reviewed and fixed. Once reviewed and fixed, no, then everybody gets aligned to that. If somebody is not taking accountability to that number and spending whatever they want to spend, then they are not aligned to the budgeting and it will fail. Are we monitoring the variances and are we taking the corrective actions? If you're taking the corrective actions, then budgeting, only if an entrepreneur makes sure that he's taking corrective action, everybody will be aligned to his the goal of the organization and works towards achieving that budgetary objective. Shared you why budgets fail also. No, we should not make our budgets fail. That is one important aspect that needs to be taken care. So let us say you have defined your budget objective. This year the objective is going to be more focused, since it's a growth oriented company, more focused towards sale. Next year we will look into profitability, or this year it is profitability, next year it is going to be cash flow, whatsoever it is. Now how budgeting is done? If we do not want the budgeting to fail, then we have to get things in place. One, we should understand what are the organization's key drivers. What are the products that are selling more? What are the unit of products? What is the quantity that is being sold? What is the margin of each product? What is our fixed expenses? What is our variable expenses? So we need to understand what kind of organization culture we have towards income as well as expenditure. So objective of understanding the key drivers. So let us say you mainly deal with government contracts. So what is your government contract? What is the time frame? What is the value that you should add in the government contract? How can you sustain that government contract? So that will be your key driver. Let us say you're supplying to SMEs. So how B2B businesses behave? What are their customer behaviors? What is their behavior towards your product? Is your product adding value? If it is adding value, how it is adding value and how you can enhance it? So these are the things that are drivers for growth in any business. What happens through a budgetary exercises, you will understand this vertical of mine is good to go, it can be self-sustained. This vertical of mine is not good to go, whatever I do I'm not able to satisfy that customer, let us not take it forward, let us move to another service that we can provide to this customer. Third, you cannot work around also. Third, you have opportunities for expansion. There is a new market opening up. Let's say e-commerce is a new market that is opening up. Then how do you set budgets for that market and how you can work around for that in your organization? Basically three things. One, continue what you're doing. Two, shed off that is not viable for you. Three, grow in areas which have where you can look at opportunities. So with a budgeting exercise, when you do unit wise budgeting or geographical area wise budgeting, it will tell you which area is performing, which area is not performing, and you can take the decision from there on itself. Next is prioritization. So, what is the key driver? This example is something very like, Apple distributes its products through distributors, from distributors to Apple Key Agent or whatever they call them. But now they also started a new vertical called Apple Online. Now, when you start a new vertical, your focus is how you should drive growth or revenue in the new online business as well as sustain. Okay, the market in the offline business. Now, these are key decisions as an organization. When you are budgeting, you should understand that these will be my contributory factors in the organization. Excuse me. Now, let's say revenue projections and sales mix. See, revenue and projections and sales mix, capturing the sales data, gross margins of each of the product. Well, let's say when you're dealing with multi products, almost all of us will deal with some kind of multiple products where some will be high value, some will be low volume, some will be high volume, and some will be low value. An ideal mix of these products will give us the gross margins. We did one store wise product and sales matrix. So this company dealt with 6 products primarily, and the seventh one is like others. Okay, let us say primarily 6 products. The stores. And every month for each of the store, from store 1 to store 10, We understood what was their last year's pattern, what kind of product they are selling more, why they are not selling the other products, what is the kind of contribution of each of these products. If you look at month wise, also there was a variation. 54% of product 3 was sold in the store 1 for the month of April. In the month of May, only 50 percentage was so product 3 is being sold for the month May. Like this, store wise, we did an analysis why this product is selling, how much is this product. Then we did a comparison between stores, what kind of stores sell what kind of product. Then it was much easier to take decision what kind of stores what kind of stores need to be set up. So this was as far as sales mix is concerned. Then similarly, gross margins. What kind of final gross margins is the store making on each of the product? Let us say product 3 was the highest selling product. It is making 4.5% on that product, which means value of the product is low. Volume is very high. The margins are very thin in that. Other product, there's one product, 7 others, it has 36% gross margin. But they are selling how much of that product? They're only selling 6 to 7 percentage, almost 6 to 8 percentage. This store is selling 8 percentage of that product. Now, considering all this, can you not think of increasing the gross profit finally coming into an entrepreneur's critique, consolidating all the stores together or independently in each of the stores? One push towards a product, increasing the product mix from 5 percentage or 10 percentage to 11, 5 to 6 percentage. 1 percentage also increase in the products that are giving high margins will lead to marginal increase in your gross profits. But that can be still worked out. Are you all with me? I feel that I'm on overboard with all you people, but just wanted to understand if you're all with me and are able to appreciate. Yeah, thank you, Samsa. Yeah, thank you. Lunch is yet to come, so we can be a little more responsive. Yeah. Okay, expenses. What happens with expenses is we are used to making these expenses. These are required, these are not required. What kind of expenses we are having? If we have all the expenses, analyze all the expenses for 3 years, last 3 years, what is a fixed expenses and what is a variable expenses? What needs to be incurred, what need not be incurred? Every engagement that we have done, we understood the variability of the expenses and how it has an impact on the sales or how sales have an impact on the expenses. For example, let's say a courier expense is completely dependent on the sales volume. How much ever you sell, that much accordingly you will have courier expenses. But all these matter, okay? As your sales volume increases, all these also matter. Marketing is one such classic example where increase in sale will lead to increase in marketing or increase in marketing will lead to increase in sale. Both are vice versa, but then it is all related. One of the expenses example is the monthly budget on salary. What is going to be store 1, store 2, store 3, store 4, store 5, like this, and head office. What is the salary expenses? What is the breakup? What is the month for the month of April, for the month of May? If you look at, they have some kind of staff welfare expenses in the month of May, which they are not having in the month of April. So like this at a granular, when I told you that you have to work on a granular level, this is the kind of granular level working I was talking about. Only when you work at the granular level to understand the employees, then expenses incurred, the additional expenses incurred as far as perks or support that needs to be provided, the training cost, the recruitment cost, everything needs to be factored. Everything needs to be factored. Unless and until we do that, it is just not possible that you will prepare a budget that is appropriate for your organization. Now you understood the sales part, the expense part. Like this, almost every aspect needs to be worked upon. Let us say, even if you have capital expenditure, what kind of capital? This year you are going to construct 2 floors of your school premises. This year I'm going to build a new showroom. This year it's going to be a year for putting the new machinery for fabrication. a new machinery, let us say for only dyeing. Anything it could be, but let it be. You understand that this is a granular level working. I'll tell you, in spite of doing this granular level working, you will have 20 to 30% variation in your budgeting also, in spite of, which means you feel you're in control of things. There could be variation in some items, not all items, but some items you will have that 20 to 30% variation. So it is always better, at least on the cost aspects, to be as granular as possible and get things going. Now, post doing that, what is the monitoring mechanism? How frequently do you look into your budget versus actuals? What is your performance and what change should you bring in? Only if you take action looking at the budget variance analysis, the confidence on the entire budgeting exercise is reposed. Otherwise, it is mere additional paperwork or a burden to the entire team. So, you need to take action on the budget. It's very important, it needs to be taken action. Even if you're forgiving yourself for whatever you have done, that is also an action. That's absolutely fine, but you're taking action on that. Positives that you have done beyond budget, the things that did not fall as a part of your budget, and then what corrective action do we need to take care. If we do this monitoring of this budgeting exercise properly itself, everything will fall in place. The track will be properly laid, and next year when you are working on your organization, you will be much better than the last year. Every year, everybody, every time, we are just trying to evolve ourselves. We learn from our past experiences and evolve ourselves. So this is what we do through a budgeting exercise as well. What are the need? Now see, what happens is, first time when we prepare budgets, what happens, it's a more of a manual exercise, because the records are maintained in different places, and everybody needs to pull out the information, validate it, redo it. For the next year, that the plan will be different, so everybody has a different source of information. But a point should come in an organization where this work of manual work gets into an automation, which means the templates are so specifically set in the organization that next time you just have to fill the templates and you're ready with the budgeting. In spite of doing that, there will be some plus or minus, because some new developments will keep on happening in the organization, right? If that development, yes, you need to rework on the numbers, you need to, but to a large extent, if you automate the budget, you will be much more peaceful than the last year. Better reporting, more reliability, productivity will increase, less of guesswork. So automation is an important part in the entire budgeting exercise. I understand it's challenging, but it's not impossible. We have to structure the budget in such a way that when we are giving the process, the templates, or the data request itself to the employees, they are able to fill it in a simpler manner. And next year, they are much prepared. Yes, this is all will be expected from us. We will be questioned here. This is the data or the information that we need to provide. Once we do it, see, it takes 2 years. As far as my understanding and my experience goes, 2 years it takes for an organization to get its budgeting entire thing right. First year is a learning year. When they review in the first year, the second year when they prepare the budget, now they are confident. The next year my team can do it on their own. But 2 years it takes for us to handhold them and get things going. In the meanwhile, we get things automated in a structure in which the organization can take it forward from there on. It requires a decent amount of discipline to get things in place and make sure they are in place all the time, every time you are accessing for them. So now let's get into this part of what the sample case studies that we have done. We're looking at somewhere that they were taking a decision on outsourcing the warehousing management, whether they should go for job work or own production, investment in IT, and to save travel costs, and solar panel or for power travel. So these were some decisions before we prepared the budget. The organization were able to take during, actually this is a live case study of one of our clients. In April mid, we realized because of this lockdown, we're not hitting, because we prepared the budgets based on what happened last year. Okay, but end of April everything needed to be revised. So we prepared in fact a BEP budget, break even point. This year at least there should be break even. We should not have a challenge of loss. We can't sustain loss, so let us do a break even budgeting. So everything was done. We worked, I will show you the areas where we worked upon later, but we did a may again be reviewed whether our break-in point budget holds good or not based on the data of April, mid-May. Everything was under lockdown. If you look into, hardly anything had happened. Things opened up in June, July. Some push was happening. By August, some rescheduling of production took place, and some geographies became active. So with that, we're still in dilemma. Okay, by the time it was August, still in dilemma whether thing will fall in place as per the BEP or it's a very hard target to achieve. But in September, when we looked into the numbers, significant improvements were there, especially especially as far as sales, working capital. We were able to get some collection faster than the sales that we could do. And we had this consistent meeting every year, every month there was a consistent meeting. Where is this track? By November, because Diwali was an uptick that time, demand was full, almost 100% of last year. Some of the products were selling more than 120 percentage of the last year sales. So it was a positive impact. When we compared what we set for, we almost achieved 70-80 percentage of our BEP sales by the end of December. Now we revised in the December, we revised that now that we are achieving the BEP sale, let us reset the goal to 10% profitability at least. So we have reset the goal and waiting for things to manifold. Jan and February were also being great years. Jan also the sales profitability was achieved. We were looking at that month's profitability was achieved, and new strategies for the next year we began to start working upon. But it is on a, if you look at it, every month was crucial, especially last year. If you look into, otherwise what happens, there will be one confidence, madam, we will look into next month is good year month, we have Pongal, we have Diwali, we have Christmas, something or the other will happen. But next year it was but last year during COVID it was a very carefully measured exercise where every expense was monitored, zero budgeting if you call it, no, that was one thing, 100% zero budgeting. Okay, in this case, but the results have been very fruitful, because not only did the company did not make loss, but they are turning positive also. So next year when you are going to put the budgets after this during this month, then we have to consider whether we have to do the expenses as per 1920 or rework it as per 2021. Now, the impact of budget on performance, I've already highlighted the benefits of budget, but yes, the organization becomes more structured. People start talking one language. They understand that they need to take decision based on budget and it cannot be based on their interest. It gives a clear picture of expenses, financial requirements, whether we are able to meet it in the short term, we have to borrow, we have to infuse capital, what kind of actions need to be taken. Because see, sometimes some unforeseen events also occur. Okay, then it is much more easier if you are prepared with some kind of plan, or you have to make modifications to the plan, than just stand haywire and understand, oh, this has happened, now what to do. Okay, this has happened, now I have to take these action steps, because I earlier planned this one, now I will not be able to. There was a fire loss in an organization. Okay, some 3 years before. So in the month of we decided on the budgeting and everything. So there was a fire loss. Ideally what happens is they will take their own time to get things reset, but because we had budgeted, no, they said no, we do not want to lose on the sale or on the any of the activity in that place from the next month onwards. Let us get things up and right as early as possible. As entrepreneurs we want that to happen, but budget makes it more so important that get things into action and get moving from there on. Yeah, the measures that we had taken, we negotiated the rents, departments, people were sent on a furlong because there was hardly any production that had happened. People were reduced, salary cuts happened. Supply chain, the supplier, we asked for better alternatives. Some of the indirect expenses like marketing, etc., were cut down. Focus on what kind of sales we can achieve, what kind of minimum demand can be done, what kind of cash flows can be achieved. So considering all this, so many incentive schemes and all we had applied, so that by August, when we realized that we are not heading anywhere, at least couple of incentive schemes were being launched. So if you look at it, as of January, the client was able to achieve 5% profit, 180% receivables days, 180 days receivables, which is almost 25%, 20 to 25% of the total receivables. Now they were able to collect it to large extent, 80% of them were collected. These are some of the samples where store wise, we what is the product wise sales, what is the product wise GP, what is the back end GP that the client will get, because these clients will get reimbursement from their master franchisor. And then student points, what is the marketing, what is their operating expenses, what is their statutory payments, repairs, maintenance, employee cost, finance, admissible. So like this, and how much of HO expenses needs to be apportioned for them, and after that the net profit. In fact, if you look at the bigger number and the smaller number here, but this was their business model. This is how they had worked on their business. Simple. They also had service centers. What kind of revenue? SIPs, accessory revenue, service revenue, repair revenue, warranty revenue. From that, how much of the gross margins they were making, and these are the expenses. And finally, what is the net profit after apportioning the head office expenses? Even to last level, depreciation was also considered. Only thing is, post this, we did not compute tax, but then you can compute tax also on the same thing. So, as a consulting firm, what are the measures? We validate all the data that is being provided on a budgeting, store wise sales GP, highlighted the nature of expenses, understood why they incurring these expenses, compare them with the peer stores which is able to perform, and then link to a cost control mechanism. Client, what happened after the entire budgeting exercises? This top line grew by 2x. The demand for the product was there. The ability to focus, get everybody's involvement into this kind of product, and the gross margins, they were able to reduce the expenses by 12%. Profit was maximized. Continuous expansion of retail stores. They are now opening at least a minimum of 10 stores every year. That's a level of expansion that they are into. So a budget provides control, accountability, the organization, the management can focus upon a lot of bigger things instead of getting into day-to-day operations. So if you look at it, it acts as an anchor, it acts as a guidance for your direction for your goals. It helps everybody participate, making them accountable, making them responsible, and collectively we all can achieve and be bonded towards the organization goals. So this is my small session on budgeting. We've done budgeting for a large organization, cash flow and fund flow, forecasting for educational institutions with 33 or more institutions in place, family businesses where we have helped them turn around through proper financial planning and budgeting, cash flow hand holding. So these are some of the achievements as far as budgeting engagements are concerned, but we are involved in many other activities as consulting and beyond. So I'm open to questions and will be happy and glad to understand from you and take things forward. Please provide your feedback to the link shared in the chat.